What's up, everybody? It's the Common Sense Investor coming at you with another video. And in this video, I'm answering y'all's emails that y'all have sent me. My email address is commonsenseinvestor2022@gmail.com. And Gav sent me an email that asked about my risk management video. And he was curious about my risk management spreadsheet. That's a very good question, Gav, and it's very important that we understand risk management, or what I like to call risk tolerance, when you're trading with a trading bot, okay? I say risk tolerance, people, because risk management is not necessarily the right phrase for what we're talking about. I ride naked, okay? I don't use a stop loss. That's why when you look at the bot settings, and you see that I have a stop loss of 10,000, that's 1,000 pips, people. This currency will never fall 1,000 pips unless it gets wiped off the planet. Then that currency might not be worth anything. But as of right now, no, it will not drop 1,000 pips. So this is practically riding without any stop loss. All right. Now, people say that's a bad way to invest, but I would argue that your stop losses are the reason you have so many losses. I mean, think about it. Use common sense, people. Who taught you where to set your stop losses? You probably watched a video on YouTube, and the YouTuber told you, well, the best place to set your stop loss is a little bit below the last swing low. Yeah, great, wonderful. And that stop loss algo is going to get your ass almost every time. When I first started using the Galileo FX trading bot, man, it knocked my ass off. Why? I kept looking and I'm going, what is going on? Every time it entered a trade, it was exiting the trade almost immediately at a loss because it was hitting my stop loss. The people who had programmed Galileo for when I began to use it had it programmed at a 2-to-1 ratio, blah, 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 just like they teach you on YouTube. And that doesn't work, people. It doesn't freaking work. Anybody that tells you that shit works, it can show you an example. I can show you 15 examples where a 2-to-1 ratio is bullshit. It's not, it don't work like that. So how do we use this risk tolerance chart that I have here, okay? I want you to take notice that at 0.05 lot size, all right, if it falls 1 pip, I will lose 50 cents. If it falls 3 pips, I lose $1.50. If it falls 20 pips, then that currency trade that I'm in will be down $10. And if it falls 100 pips, I will be down 50. Let's take a quick look at a report that I ran for the USD CHF, which is the Swiss francs, okay? First, notice we have a 0.05 lot size. That's what we're checking, right? And on back test, we learned that the equity drawdown maximal is $54.35. That means that the currency can fall up to $54 before it goes back up and finally takes my profit. All right, so $54, we know that's the drawdown, and I go to my risk tolerance chart and I can see that at a 0.05, this currency can fall 100 pips, maybe 105 pips or 110 pips. But the point is, it could fall 100 pips. This lets me know a whole lot, people. It rests my mind that if the play's going against me and it's down 10 pips and I'm down $5, then I don't have to worry about it, because I know it can fall up to 100 pips before it turns around. All right. And the second reason I like using this chart is that, say, for example, the play goes against me and it's down 50 pips and 60 pips. And I'm not really worried because I know that it's going to fall approximately around 100 pips at worst case scenario. So this would be a good place for me to cost average down. And that's what I do. I start with a 0.05, and then when it goes against me like it's doing right now, I would say, okay, I want to cost average down with a 0.03, And as the price comes back to the mean line or my balance line, which it always does, all right, I will have cost average down, and I'm making money off that 0.03 lots while I'm waiting on it to get back up to my break-even line with the 0.05 trade. You understand? That's why a lot of times you'll see in my trading journal, for example, we got the New Zealand US dollar at a 0.1 lot size. I didn't start there, people. It was a 0.05. It fell down to close to the maximal drawdown, so I averaged down another 0.05 because I knew that that was pretty much where it was going to turn around and go back. That's a better indicator than the Fibonacci, I'm telling you. So I put 0.05 more down, and it ended up bringing me, instead of $3, it brought me $6.71 for that trade. But I felt comfortable doing that, looking at my risk tolerance, and I knew that I've got well over 100 pips that I can fall before I would even have to begin to worry about this currency or this trade. And I can go to sleep knowing that I'm not going to supersede my free margin, which is the number one thing you must watch out for. With that, I hope this helped y'all understand that you can get into a trade with no stop loss and watch your maximal drawdown, know how many pips it can fall before it turns around and starts going back in your favor. And that gives you peace of mind in the trade, and knowing that at a certain point, maybe halfway to the drawdown, you want to average down. That's one of Brett's big secrets that me and him are talking about. When he runs a optimization test to see if the settings are good, and he knows what his down draw is, in this case it's 54 because I'm using a 0.05, but in his case it would be $540. He would be going down $540 before it could turn around and go back up and make him them awesome profits you're seeing. But he knows that. He knows it's going to fall $540 on him, so he can concentrate on where best, if it goes against him, can he profit if he cost averages down at around $375. The play is down on him. He says this would be a good place to average down. And he does, and he is making a killing. Now, update, I believe I'm reading this right. He sent me a new update on how much he made on December 30th. All right, that I did the last video about. People, if I'm reading that right, and I know I am, he made about $19,000 in one day. All right, so I'm going to be coming back to y'all with more on these bots, how to use them and how to make that money. I'm going to see if Brett's not so camera shy like a lot of people are. Maybe he'll want to go on a live stream with me, and together me and him will talk trades through and help everybody learn how to use these bots and make the returns that he's making. And with that, hope this was educational for you. Love you. Be blessed, and I'll see you in the next video.